Hey, what's up guys? My name is Daniel Lopez with Invest in You Finance, and today we're going to talk about the true cost of owning a home, your primary residence. For the example, we're going to talk about the house that I purchased as my primary residence back in 2016. I paid $240,000 for this home. The down payment was $48,000. I used my 401k and I took a loan out of my 401k. I have a video about that. If you want to go see it, check it out. And that was 20%. So the amount of money that I financed was $192,000. The financed amount was right there. At an interest rate of 3.5% for 30 years. The payment was going to be $945 every month. Plus the insurance was $83. So all in for the payment is $1,028. Have not included the property taxes, but I'll talk about that right now. The total interest for this loan is $118,000. Total payments, $340,000. Plus the insurance for 30 years comes out to about $30,000. If you add $30,000 plus the total payments for the loan, you get $370,000. So if you add $370,000 plus the property taxes are $9,000 on this home. So every year I have to pay $9,000. I did not choose to escrow the property taxes because I like to pay my property taxes at the end of the year. I like to keep that money in my stock account or in my accounts so it's growing and growing, and I'll just pay that at the end of the year, one lump sum of $9,000, because I like to control my money. I don't want to put that money in escrow and then the bank or whoever gets to do whatever they want with the money. I like to keep my property tax money in my accounts until it's time to pay them. So that's what I like to do. So that's why I calculated it separately. If we multiply the 9,000 times 30, you get $270,000. So if you add the 270 plus the $370,000, you get $640,000. That's the total amount of the loan plus the property taxes, and this is how much it would cost me to live in this house for 30 years. That's all in. I'm not including, gas, electric, and the water or the internet bills. I'm not including that. Maybe later on I can make a video about that. I just wanted to do some simple calculations to kind of get an idea of ultimately if I wanted to continue living in this home or if I wanted to sell it. Because back in 2019, the stock market was doing pretty good. And I think it was like at an all-time high. I don't know if it was like the beginning of 2019 or the middle or the end, but I can't remember. But anyways, I had some stock that had appreciated in value. So I wanted to get rid of this payment because it was, I don't know, I just got tired of it. So I just said, I'm going to move that money from the stock market. I'm going to, laterally move it to the home and pay off the house. So in 2019, I paid off the house and the loan was taken care of. So I no longer had the $945 payment, and I owned the house, like 100% my house. So from there, all I had to worry about was property taxes, because even though you pay off a house for the rest of your life or for however long you continue living in that home, you are going to have to pay property taxes. And everybody knows property taxes go up every single year as the value of your house goes up. And every year I would get the property tax bill. I would look at it and I would be like, oh man, I gotta pay this. Gotta write a check and give it to the city, the tax assessor. So that was, I had to do it because you have to pay your property taxes. And I was looking at the numbers and I was like, oh man, okay. Like at first, this was my dream home. I loved it. You know, I fixed it up really nice, but I was deciding like what ultimately I wanted to do. I was still working at my corporate job. I was still um, just working remotely and getting paid. So I hadn't really decided whether I was going to quit and things like that. But I wanted to do the calculations, figure out what the true cost of me living here was and the opportunity cost that I could, like the opportunity cost if I continued to live in the house or if I would sell it and then invest that money. So I said, well, in 2019, the house is paid off. So I'm no more payments. I'm done with that. What if I sell the house and put that money in the stock market? How much would that be? Because I own the house and I would just, get a check once the home was sold. So I calculated to see like what numbers I would get. So what I did was, first I calculated how much the property tax, hypothetically, how much I would have at the end of 30 years if instead of paying property taxes, I sold the home and whatever money I was using to pay the property taxes, I just invest that money. So I decided to see how much $9,000 compound over 30 years would be if I had an annual rate of return of 10%, and I just bought like an S&P 500 index fund that just tracked the market. So I calculated that I would have around $1.5 million. It would have been, the way I did the calculation was $9,000 principal, because when I bought the house, I still had to pay, taxes because I bought it like at the end of the year, I think. So I already had like, a little bit of money in already, plus the rest of the 30 years, I was gonna put $9,000 every year. It was gonna be more because every year the property taxes were just going up, 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 up. So for this calculation, I just wanted to do 9,000 just to make it easy. So I did 9,000 compounded over 30 years at 10%. I got $1.5 million. So that's how much money I could potentially have if I sold the house and invested $9,000 in the stock market. Of course, I would have no home, but I would have the check for how much the house was worth. I ended up selling the house and getting around $450,000. So then I calculated, okay, how much would I have in the stock market if I put that $450,000 in the stock market? Same thing, S&P 500 index fund, got a rate of return of on average 10% over 30 years. That comes out to be 7.9 million. So I would have 7.9 million plus the 1.5, and total I would have 9.4 million. That's if I sold the home, got that money, put it in the stock market, and then continued to invest $9,000 every year into the stock market. I would have a total of $9.4 million. I wouldn't have a home because I sold it. However, I would have, this much money. Of course, that's in 30 years. So once I saw this, I told myself, okay, if I keep the home, how much would it appreciate? And I looked up, just the average appreciation for homes over the last 30 years. And I just got a range, basically. I got a range of 5% to 10% appreciation. So 5% to 10% appreciation on $240,000 over 30 years that comes out to be 1.2 to 4.2 million dollars is how much the house would be if I continued to live in the house and keep it 30 years later. After I paid $640,000, the house would be worth 1.1 to 4.2, depending on how much it appreciated. So if we subtract that, you know, it could be anywhere from like $500,000 to like 3.7. If I consider that I paid this to buy the home. So I wouldn't have any money in the stock market because all this money was, the $9,000 in property tax was used to pay the property taxes every year for 30 years. And I never sold the home, so I would not have received the $450,000 for selling the house, so I couldn't put that in there. So I'm thinking, okay, would I rather have a house that's worth, you know, 1.1 to 4.2 million with nothing in the bank, or would I rather have potentially 9.4 million in the bank with no home? Well, not with no home, but I would have to figure something out. Basically from the $450,000, either rent or buy a house. So ultimately I just decided to sell a house. I was like, I'd rather have the bag of money, I'd rather invest the money and let it grow in the stock market. At the time, my wife and I were thinking, you know, we could travel and live in different cities for 6 months at a time and figure out where we ultimately wanted to end up. We didn't want to live in our hometown in Texas. We wanted to, you know, travel, explore, and see things that are out there. And fast forward to now, we have my daughter, and she's 4 months old, so we still want to travel and take her with us, obviously, and enjoy our life, because there's still so many places out there that we haven't seen, and we want to go explore and enjoy ourselves. So that's the situation. I'm currently renting right now, and my rent is $1,000 a month. So wherever I'm getting that money from, I mean, we could say that I'm pulling it out from the 450. I mean, wherever it's coming from, I'm having to pay that money. So ultimately, if I apply the 4% rule to the $450,000, that means that every month I could pull out $1,500. 4% of $450,000 is $1,500 every month. So 4% rule says I can pull out $1,500 every month, and this $450,000 will last with inflation around 30 years. So that's just an option of where I can get money to pay for rent or, you know, pay for whatever. And the $9,000, of course, that's just an option. If I wanted to invest that $9,000, I could, or if I'm just using that money to live off of, I can do that. But ultimately, if I still own the home, I was gonna have to put, no matter what, for the rest of the time I own the home, until I didn't own it anymore, I was gonna have to pay $9,000 every year. And the sucky thing is that the people who bought my house, as soon as they bought it, they had to pay $14,000 of property taxes the following year. So that's what's happening right now. People from California are coming to Texas, and they're buying these homes that are, you know, they're selling their home for like $1 million, coming to Texas, buying homes for like $500,000. Well, Texas doesn't have state income tax, but they do have high property taxes. And that's, that's a lot of money. I think $14,000 is, if it's $12,000, it's $1,000 a month if you paid off the house. If you didn't pay off the house and you still have a mortgage plus that property tax. But for my situation, I paid off the house. So when I sold it, I was able to take all that money and invest it. If I didn't pay off the house, then after I sold the house, I would get the profit of what was left after I paid off the loan after selling the home. So that's how it would work. I wouldn't have the $450,000, but I would still have the stock in the stock market. Would that stock have continued to keep growing? I don't know. I need to go back, analyze that situation, draw up on the board all those calculations and see if selling stock to pay off my home was worth it or not, or how much I lost, or how much I gained. So that's another calculation, another video I gotta do. Anyways, guys, this is the true cost of owning a home. And I just wanted to share with you guys how I decided to sell my home, invest the money, and continue to rent. We're gonna continue to rent because we plan on moving to a different city every 6 months once the baby gets a little bit older. And right now we're still living in Texas. So this is just an example of what a home costs in Texas. Different places have different property taxes. I'm not sure what property taxes are in other cities. I just know Texas has high property taxes, but they don't have state income tax. California has low property taxes, and then they have state income tax. So that would be a good calculation to figure out if it's a wash or, what the difference is right there. For this situation, I'm happy with the decision that I made. It was our dream home. It was amazing. It was great. It was perfectly manicured. I fixed it up like super amazing. However, ultimately, we wanted to travel. We want to, see different things, experience different cities, and ultimately, by experiencing the different cities, we can decide where we wanted to end up and live for, when the baby starts going to school around 4 years old. So from now until she turns 4 years old, we can travel, enjoy ourselves. I'll continue making YouTube videos, hopefully providing you guys a lot of value. And all I want to say is thank you guys for watching. I appreciate you guys coming to check out the video. Please like, please subscribe, please share the content. Check out my other videos. I did take out a 401k loan and I did do the calculations. And when I sold the home, I ended up paying off that 401k loan. So this $450,000 was, $400,000 because I paid off the 401k loan. But go check that video out. The reason I did that was to avoid PMI. And in that video, I have 2 videos. One that shows like in-depth calculations with calculators, and you can go online and plug in the numbers with the calculators that are free on the internet out there. And the other one, I just draw everything on the board and kind of tell a better story about it. So let me know what you guys think in the comments. Are my calculations right or wrong? What do you guys think? Did I make a good move? Did I make a bad move? What would you guys have done? Are you guys in California moving to Texas? From what I've seen on the news is people who live in Texas have homes that they've had for a while, and because everyone from California is coming to like Austin and different cities in Texas, they're driving up the price, which the original homeowners who live there, their property taxes are going up. And according to the news, they can't afford to pay their property taxes. So, all this crazy stuff's happening. But right now, they're saying that, the housing market's gonna come down with interest rates going up. I mean, 3.5%, that's awesome. If this was 6%, yeah, no, like I'm not buying a house right now when the interest rate is like 5.5 to 6%. Maybe I'll buy it and refinance later on if it goes down, or get a 5-1 arm and leg loan where it's a little bit lower, but it's not really that much lower. I don't know. Ultimately, we're just gonna travel, we're gonna rent, we're okay with it. As long as rent is like a decent price, then we'll be okay. So let me know what you guys think. The property taxes, I mean, $9,000, that's for a $240,000 home in Texas. Imagine, basically you would double these numbers if you bought a home that's $500,000. $500,000. I mean, you're gonna be paying, $18,000 in property taxes every year, forever. And the reason I sold my house is because I knew I was gonna quit working at my corporate job. So I wasn't going to want to have a house that I was gonna have to pay, because on top of just the loan, you gotta pay for your lawn, if you have grass, like all the bills that come with the home, roof, I mean, everything. So buying a home is okay if you buy it and you already have equity in the home. This home that I bought, I purchased it for $240,000. The home was actually worth $360,000, but it was a fixer-upper and it needed a lot of work. So if you're buying a home, I would highly suggest you buy a fixer-upper, because then you have equity inside of the home. If you're buying brand new construction, I mean, it's good because then you won't have to deal with problems that might happen in the home. But ultimately, these are just calculations and you guys can make your own decisions, but I want you to actually make the calculations and see what the opportunity cost is. Because here, the opportunity cost is $1.5 million if I, stop paying the property taxes and started contributing that $9,000 into the stock market in just a normal S&P 500 index fund. But anyways, guys, that concludes the video. Thank you for watching. Please go check out my other videos, and I'll catch you in the next one. Peace.